point A to point B, and their team that they have just doesn't help them get there. So we provide those business accounting services to help them get over that hump and get from $500,000 to $1 million, or $1 million to $5 million, or whatever stage they're in.
Very
All
cool.
right. So let me share screen. There we go. All right, perfect. So I am an accountant, but don't hold it against me. I'm a lot more fun than most accountants, I hope. So what we're going to talk about is 3 steps that you can do to increase your profit in 2021. I'm very much bottom line driven. You can be a $10 million company all day, but if you're making 3%, why are you getting out of bed? Or you can be a $500,000 company making 30%, and then it's worth getting out of bed. So when I work with clients, we focus on the bottom line to put more money in their pocket and to reward the owners for all their hard work. And I believe Taylor has this handout that he can pass out. This is bio information about me. So these are all practical things that you guys can do right now within your companies to figure out how you can increase your own profitability for your company, or if you're running a division or a department or whatever. These are things that you can actually do now to get real benefits. So the first thing is to do an expense audit. We recommend doing this at least quarterly. And it's really simple. If you're not an accountant, you don't like all those things, just look at your bank account and see where it's been going and figure out what's fixed costs and what are variable, as in what changes and what doesn't change, and figure out, are those exactly where you need to be spending your money? Really good example. Recently, I have a company that I work with down in Florida, and they went through and we did this expense audit, and he found $700 a month just in software. And it was just because he did this, ran the report and saw where the money was going, and determined that he had excess licenses in one software. He negotiated with another, and then there was one software that was just hitting his credit card, and he just never took the time to turn it off. Well, $29.99 over and over adds up. And then this also gives you an opportunity to talk to people like your landlord or those type of people to try to negotiate. And I've got a script right here. This works really well. You'd be amazed what happens if you just ask. And it's, I've been a loyal customer for years. We value our relationship with your company. We're conducting an expense audit and are wanting to know what you can do to help us cut costs with your company. And it's that simple. Like, that script works over and over again, because you're not going to them and saying, hey, cut all my costs. Hey, what can you do to help? And then what I find is, if you're quiet, then things happen. Again, software landlords are easy ones. Utilities, those are kind of hard. Those are fixed costs that happen. Payroll, there's even some room to give with. But if you're wanting to put more money on your bottom line, the first step is to figure out, where is your money going now? Does it still need to go there? And is there any changes that you can make? And for you, it might be $10 a month, where for my other client, it was $700 a month. And most companies don't have a huge hole in their company. Most of us just have what we call a leaky bucket, where there's a small amount of money dripping out that it's $19.99 a month, or, oh, I need to get to that, but I just don't have the time. So by doing an expense audit, it makes you stop, and it makes you focus, and it makes you iron down and focus on what's really important, what's not, and put your resources there. So the second thing that you can do to put money on your bottom line now is to review your income sources. So figure out where your money's coming in from and if it's profitable or not. We have another client who, they're in California, and he's got 3 different product lines. He's a service-based business, but 3 different services he provides. And we did this exercise with him. We ran a P&L for the quarter, for rolling 12, and looked at the gross margins. And if this isn't making sense to you, then get your bookkeeper and have them do this for you. And if your bookkeeper isn't capable, then you need a new bookkeeper, because your bookkeeper should be able to provide these services. My firm, we do bookkeeping as well as fractional CFO, and all of these are services that your business accountant should be able to do if it's not your skill set. And that's completely fine. But whether it's you or someone on your team, have them run these numbers. And for this client, we found out that 2 of the income streams, he was making like 7% at the end of the day. And there was 1 income stream that he was making 32%. Now that's worth getting up at, getting up in the morning. And so what we've done is switched his business structure and his sales team to push that one product or that one service line to get more money on the bottom line. And we've also looked at the other 2 services to figure out what we can do to change the pricing structure so that we can get more money in the door. But those are decisions he would have never made if he hadn't stopped and run these numbers. So look at where your money's coming in and see if it's coming in profitably. And if it's not, then focus on what is profitable. So the third thing is to manage your cash. That's me looking very serious right there. And as Taylor mentioned, Profit First. I am Profit First certified. Profit First is a cash methodology, and it's a book written by Mike Michalowicz. If you have not read it, I highly, highly recommend it. And if you go to Pivot, I'll think of the URL in a second. I've got a URL where you can get the first couple chapters free. And it's basically helps you understand how to manage your money as an entrepreneur, not as an accountant. And it's not GAAP, it's not all the confusing terms and retained earnings and depreciation and EBITDA and all that confusing crap. It's, okay, you have money come in, this is how you can manage it. And how we do it is through the cash, it's all cash based, and it's through the envelope system. So what we do is we manage your money. So all money comes in and then we put it into different envelopes or bank accounts. So this is how you can better manage your money. Because right now, if you were to pull up your phone and your bank app, right? Anyone want to admit to checking their bank balance every morning? You pull it up, you look at your phone, you see what's in there, you've got $30,000. Well, cool, I'm good to go, right? I can go buy that whatever or hire that whatever. But with Profit First, you pull up and you have 5 bank accounts, and you might have 30,000 cumulatively, but you only have 7,000 in your operating account, which means, Eric, that's all you have to spend this week, right? Instead of 30,000. So it's a different mindset, and it's bank balance accounting. I work with a lot of entrepreneurs that are fantastic and skilled at what they do, but they just ignore the numbers because it's just not their thing. And this allows them to pay attention to their numbers and know exactly how much they have to spend. We've got a client that we implemented this, and I was on a phone call with him, his CPA, and his bookkeeper, and we were discussing Profit First and how it was going. And his comment was, I've never known how much money I had to make decisions with and how much money I could spend on inventory. And because of using this system, I know exactly how much money I have, what it's for, and how much I can spend on inventory. And so it's very freeing for him. And so there's other tools out there. Profit First is just the one that I found that most matches entrepreneurs and how they make their decisions. And so the simple formula is it's sales less profit equals expenses. It's not the work hard and you get the crumbs. It's work hard, take your piece off the top, and what's left is what you run your company off of. So with the handout, it talks about how to implement it. The book is fantastic. I highly recommend reading Profit First to understand how to better manage your cash. And if it's not the right system for you, that's fine, but there's other really good resources out there to help you. If any of this has been helpful or you want to have a conversation, I'd love to have a conversation with you. Talkwithpam.com gets you directly to my calendar. And I believe the URL is pivotyourprofit.com. Should send you to a landing page that gives you the first couple chapters of Profit First for free in a digital form. And if that doesn't work, just message me and I'll happily send it your way. So what questions can I answer for you guys?
Awesome. Thanks, Pam. There's one in the chat from Steve, and then I had one for you. Steve asked if you do pro forma work as well.
Yes, I do.
Do you have thoughts on that, Steve, that you wanted to elaborate on? Or is that? You
As
got
far as
to.
company valuations, obviously there's 50 different ways to value a company and do projections of where you're going to be in the next 1, 3, 5 years. We have lots of tools to help you with that, to help you get a clear picture of where you are and where you're going, and to help you make a plan. The way I explain it is, tax accounting is looking in the rearview mirror of the car, or where your company has been, where business accounting is looking out the front window and is helping you get where you want to go. So we work with our entrepreneurs and our clients and figure out what's your goal, what's your 3, 5 year goal. And then we reverse engineer it and work a plan to get there, and then walk alongside them to help them get to that 3-year, 7x exit, or, 3-year 20% bottom line, or whatever their goals are. But yes, we definitely do performer work.
Awesome. One of the questions I had for you, Pam, was as you were going through those 3 steps on the audit, could you dive a little bit deeper into just what are the steps to start that audit? Like, how do you look at it? What do you do? What information do you need? And where do you usually look first to find the expenses that are probably most likely candidates for reduction?
Sure. So the first thing to do would be to go to your accounting software and run profit and loss for the last 90 days, and then also for the last 12 months. And you can put it into an Excel spreadsheet or Google Sheet or whatever, and just identify next to each line item which is a fixed expense and which is variable. And then start with your variable costs, and those are the things that change. That they may not be required for you to keep your doors open, that you could go and dive into and figure out, where can I save money here? And then you look at the fixed expenses and also say, okay, those are fixed, those don't change, they're the mortgage, the payroll, those kind of things, but is there any room that I can make a change? One example is, we had a client that he had 3 people in customer service, and we did this expense audit, and we had some key indicators of how many calls they were making and those kind of things. And we were able to identify that one of them was doing 80% of the work. And so we let the other 2 go. And that was an $8,000 a month savings for him. And he was like, oh, no, it's payroll, I can't let him go. And I was like, okay, well, let's dig a little deeper, because yes, it's a fixed cost, but are they really all performing? So it's just a matter of making the list of where your money is going, determining what's fixed and variable, and then going through and being like, do I really need all these? And if I do, leave it, but is there someone I can ask for a price cut? Or can I get a discount if I pay on time, or if I pay early? Because there's most companies, I'm not going to find 10% from one line item that I can put to your bottom line, but I can easily put 3 to 7% on your bottom line by looking at your entire list of where you're spending money. And sometimes it's shipping costs. There's lots of other providers, if you're an e-commerce, that you can ship more economically, where you can bid it out. Software is always a huge one. Travel is always a good one. Obviously with COVID, not everyone's traveling right now, but there's ways that you can leverage credit cards and bonus points and those kind of things to save actual cash to put money on the bottom line. So there's lots of things to look at, but step 1 is just to print out where your money is going, put what's fixed and variable, and then identify, do you need it or do you not need it? And then if you do need it, is there a way to dig down and make that a smaller number for you each month?
Very cool. Thank you. Krista, do you want to unmute yourself and kind of give some context to your question?
Yes, can you hear me?
Yes.
Okay, so I've approached a couple of vendors before, and I know that they're really sticklers to not budging on any reductions. I know that they're probably the best people to be working with, and that a better deal than other places. But how do you get them to just move a little bit?
Sure. So that's when you start negotiating on bulk purchasing, or like early payment discounts. So be like, okay, well, if I pay in 10 days, can I get 1% off? Or if I can send you a PO for the next 3 months of purchases, can I lock in a lower rate? Because if you're committed to working with that vendor, Krista, you can get a lot. You do have some leverage. And some people just won't budge. But the worst thing they can say is no. The best thing they can say is, yeah, here's 5%. So bundling your purchases, asking for early payment terms are two of the easiest things, because most people want their money as soon as possible. And yeah, they'll give up 1%. Well, 1% for you adds up too. Does that help give you some ideas?
Yeah, that's great. I really like that. Thank you.
Thank you.
You approach, Pam, would you suggest approaching vendors or suppliers in different ways depending on their product? Like if it's a physical product and you can order in bulk, yes. Mm-hmm. If it's a software or a license, is there a different approach that you would take?
Sure. Software and license, if you can commit to that software for a longer period of time, they'll lock you in at a lower rate. Like Infusionsoft, if you go to Infusionsoft and say, you know, I guarantee, 5 users for the next whatever term, can I get a lower rate? All of that's negotiable.
Very cool. Landon, do you want to unmute yourself and give some context to your question as well?
I write a lot better than I speak, so I don't know if I can.
Yes.
So I'm just curious. Yeah, Pam, go ahead.
Yeah.
Yeah. And so what's that like, right?
Yeah, it's freeing is what it is. Because it's flipping the P&L upside down. And I'm an accountant, I've got my degree, but it's saying sales less profit equals expenses. And that's what I'm going to run my company on. And what that means is multiple things. It means you, Landon, the entrepreneur, make more money because you actually get paid. It means that there's money left over at the end of the day for distributions. It means that there's money set aside for taxes. And it means that you know exactly how much to run your company on. And it also means that you get a higher valuation for your company if at some point you want to exit. Because most companies do a valuation based off of a multiple of EBITDA, which is your profit. So the more profit you have, the more valuable your company is to outside investors or purchasers. So yeah, it's 100% doesn't make sense from what you learned, which is why it works so well for business owners and entrepreneurs, because most of you guys didn't go through 4 years of accounting. You went through 4 years of hard knocks and 10 years of building a product or a service. And now it's this company and, you're passionate about it, but it doesn't make sense. I was talking to a client yesterday, Landon, in California, and I just broke Profit First with him last week. And I gave him the first couple chapters and he read it over the weekend and then got the rest of the book on Kindle. And he said, for once I realized I'm not wrong. Like my thinking isn't wrong because I've, as an entrepreneur, I didn't want to just take the crumbs. Like I'm working I'm working 80 hours a week. I'm sacrificing the time away from my family. I don't want to get what's left. I want to, I want to be rewarded for my work. And that's what it does. So yeah, it's not normal, but you make more money and your company's worth more and you are guaranteed to be more profitable and have better management of your money and.
It's the kind of pushback that you might get from maybe not the entrepreneur, but maybe some of the partners or the management in the company.
Yeah. So sometimes like the bookkeeper will push back because they're like, oh, more accounts, that's more work. Okay, well, 3 of the accounts have 4 transactions or less a month. And so if you can't do if it bothers you too much to reconcile 4 transactions a month for 3 accounts, that's ridiculous. On a best case, it should take 10 seconds. Worst case, 45, especially if you're on like a software to automate those. And the management team can be bought in because part of that cash management for the profit could be a bonus structure. So we've got a client in DC that I was getting some pushback. And so we're like, okay, well, we're going to do this system. And if it works, we're putting aside 2% for end of year bonuses. And now for the first time in 5 years, they're getting a bonus because we implemented this system. And now they're, thanking me because now they're going to get more money where never before they did. And they were balking the system. I'm like, but look, it works.
That's awesome. I'm wondering, Spencer, in your business, how would you see that mentality working? Like, do you see any roadblocks, or what would be the issues you would see in your business to implement that type of system?
I think it's just making, I don't know, I guess that's why you kind of have your accounting people that really tell you what is, and you rely on them. And I think, would it take someone that's maybe not as proficient in accounting, and that's where you'd use these kind of services rather than have an internal CFO or internal accountant. And I think the second part of it is really, I don't know what I don't know. So tell me what I need to know. Tell me what's important in my business, because many times I don't know.
Yeah. And Spencer, that's what we hear a lot is, I don't know what I don't know. Like literally I had 2 sales calls yesterday, and that's a direct quote of what both of those business owners said. And it's a higher level of looking at your financials is what a business accountant brings, where your CPA just tells you what happened and what you owe in taxes. And if you have an internal bookkeeper, that's fantastic, but can they do a rolling 12 months P&L and a projection and all the things that a higher, different thinking accountant can do? Everyone needs a good bookkeeper. I'm not knocking that at all. But as you grow and scale, you need higher level financial assistance as well.
I think one of the other things is everyone relies on like the president or CEO to really tell them tell me what you want to see and I can make it for you. What? I don't know what I want to see. Is there money in the bank? Yeah. Okay, then spend it.
Yeah.
Pam, how do you choose that profit number for your business?
For what you want your bottom line to be?
Yeah.
How much money do you want to make?
Is it dependent on, like, are there things that in certain industries it just doesn't make sense to have a certain amount, or is it just strictly how much money does the owner want to make?
Well, the whole pigs get fat and hogs get slaughtered is relevant across all industries. So, if you're in e-commerce and your profit's 70%, you're not going to be in e-commerce for very long. So there's definitely industry standards of profits that you can work towards. And part of Profit First is there's a chart that says target allocation percentages, and it has what the target profit should be based on your gross sales. And so that's a tool that's available to give you, for a lot of companies, it's 10, other companies, depending on the size, it can be 20 to 30%. And that might sound like a lot, but the system works. And I say, how much money do you want to make? Because that's relevant as well.
Very cool. So one of the questions was about the systems or the tools that are used on the accounting side. Do you have, other than QuickBooks, do you have preferred tools or software that you would suggest to the group in terms of what they should be using to create their dashboards or understand kind of what you were talking about?
There's lots of software out there. It just depends on how much you want to pay. And what I found is there's no one software that draws from everywhere. So most of us have 1 to 5 different software platforms: Shopify, QuickBooks, Facebook ads, Google ads, payroll platforms. We have multiple softwares. So I haven't found one software that pulls from everything and puts it on a dashboard. What we typically do is work with the entrepreneur to figure out what's important to them and create a dashboard within Google Sheets for them to know what's working and what's not working. We make it very high level so that they know everything's good. To Spencer's point, is there money in the bank? Are we making money? Cool. And then we have some other key metrics of, okay, now we've got a problem. This is what our monthly minimum of sales is. When we go below it, we've got a problem. And in 2 months in a row of that, we need to make a hard decision. So there's tons of software, but there's not one that I can point to that, gets it all done.
Cool. Steve, you wrote in the comments, determining capital needs besides what's in the bank to reach what you want to make likely is required. How do you approach capital needs?
Sure. So that's part of what your budgets and what your goals are looking forward. Do you need to hire more people? Is there an expensive software that you need to invest in? Do you need to get a VA? Do you know, whatever you need. And that's, you have to work that into your cash flow and your projections of, as money comes in, I need to put aside 5% because I need to buy a new truck, or 7% because I want to have 2 months of the person's salary in the bank account before I hire them. So it's just a matter of being intentional about what you want with your company and what your goals are, and then putting money aside to get you there.
Pam, this is Steve. I'm following up on that question I just put in the chat box.
Yes.
A lot of capital really has to come in before a savings accumulation occurs. Most of these companies can't wait on savings to grow at the rate they need to. And I was really more addressing how you're analyzing, external capital inputs into the company, what point those are actually required, rather than internal earnings as a capital source.
Sure. No, great. Thank you for clarification. I am a believer that there is a thing called good debt, especially if you're growing and scaling. And so if you have a large CapEx expenditure that you've got to be bringing on, and you can't wait the 3 months, then it's time to go to an outside lender and figure out what money you can get and with the most favorable terms. There's normal streamlined vendors, banks that do lending, but if you've been in business for a short amount of time, your numbers aren't that great, there's some other less favorable terms, people that will give you money. But if you can get $100,000 at 10% and in 120 days be able to pay it back because the investment's going to flip, then that makes sense to do. It's a case-by-case basis of how long till the return and how long can you take the hit of that drain of the cash, because you are going to have to make the payments. But during COVID, most of my clients got PPP loans. Most of them got the EIDL loans. A lot of people even went out and got additional lines of credit because initially banks were throwing money out. So there is a time to go in and get debt, but you don't want to be overly leveraged, because then if another pandemic happens or something crazy happens, you don't want to be upside down and not be able to pay your liabilities and then shut the door.
Cool, thanks. Tyler, do you mind unmuting yourself and giving some context to your question as well?
Yeah, I mean, Pam, this is awesome. I love accounting and everything. They're actually my favorite. Well, I shouldn't say this with Taylor on here, but they were some of my favorite classes in college. Sorry, Taylor. So especially at like extremely early stages, like 100K, like below 100K a year stages. I mean, that's where my business is at right now. I don't want to ask balance, because obviously, sometimes it's not what it's about, but what strategies do you use to accomplish both, to, use that profit first equation while trying to scale quickly and healthily?
Sure. What I recommend is opening 3 bank accounts. If you can't do the whole profit first system and you're starting out, have one be a profit account, have one be a tax account, and the other be how you run your company. And with every dollar that comes in, put 1% in profit and 1% in tax. And that small amount will grow and give you reassurance that the system works. And hopefully, even at a small size of that, you're profitable. And when the tax man comes, you've got the money sitting there. And if the tax man doesn't come, you have the money sitting there that you can reinvest back in the company. So my recommendation is open at least 1 bank account and start putting 1% in it, period. Just put it over there. It's just like, having a 401k, you sign up for the 3%, you don't even miss it. So put 1% in another bank account and keep on rolling.
I love how direct and quick of an answer that was. And I've seen that work in my personal life with doing that. And, it's bizarre that sometimes you don't apply what you see work in your own personal finances and you don't think about it in business, but thank you. Thank you.
Yeah. Now go open another account, put 1 over there, and don't even think about it. Perfect.
That's awesome. So we're at 11:45. Typically, that's where we'll start wrapping things up. But I'm happy to keep the Zoom room open until noon. But I know, Pam, you may have other obligations, but happy to keep the Zoom room open for other discussion. Thanks so much for the presentation, Pam. I will send out the handout to the group, and yeah, if there's a good way for everybody to contact you, whether it's through LinkedIn or an email, please reach out to Pam. And anything else, any other advice or guidance that you would share with the group, Pam?
Don't ignore your numbers. And if it's not your skill set, find someone who can help you. Because I have clients that come to me that are doing $4 million and they haven't done their books in 2.5 years. And it is a disaster to clean up. So regardless of your size, don't ignore your numbers. And if it's not your skill set, outsource it.
Awesome. Cool. Well, thank you so much for your time, Pam. This has been great. And if anybody wants to stick around in the Zoom room and chat, happy to keep that open. But thanks so much.